That's it for our graphics and analysis today. We would move to tell you what a commodities market is looking like as we move on tomorrow after the holidays. And of course, stock markets are also in Nigeria. Of course, there's a public holiday here, as you will know, celebration of the Easter holidays. But Fitch Ratings has upgraded Nigeria's outlook to stable. That's from negative. Yes, that's true. It's no more news. We've heard about it, highlighting renewed confidence in President Bola Tinubu's administration's commitment to far-reaching policy reforms. While Nigeria's long-term foreign currency ratings remains at B, Fitch says the economic direction taken since mid-2023 is starting to bear fruit. Now, a key turning point was the Central Bank of Nigeria's introduction of a new FX matching platform and FX code in 2024 to enhance price discovery and transparency, following a 40% naira depreciation in 2024. Now, these reforms helped narrow the official parallel market gaps and boosted FX liquidity. Net FX inflows through the official and autonomous channels surged by a whopping 89%. That's in Q4 of 2024. We saw that report, compared to an 8% rise the previous year. However, Fitch expects modest depreciation in the short term, particularly as external risks mount. My guest is Mr. Kenneth Erikume. He's a partner, tax reporting and strategy. He works with PricewaterhouseCoopers. He joins me via Zoom this Monday afternoon for us to have this conversation. Mr. Kenneth, happy Easter celebration to you.
Happy Easter, Tolu. Thank you for having me on your show.
Yes, it's good to have you start the week with us on the show. Now, Fitch Ratings and its implications is where we'll start our conversation from. It seems like it's not all bad news. We are getting to hear some good news coming with regards to Nigeria's economy at this time. How does that come to you? What does it mean for our economy, considering where we're coming from?
Thanks, Tolu. I think it means a lot. Any improvement, no matter how minor, is significant for us at this point in time with regards to our economy. And by no means, the rating is not, even though it's an improvement from B- to B and stable, it's actually quite significant, to be honest. Just that upgrade from B- to B suggests that, the country now has an outlook that suggests that we can meet up with our debt obligations because of our improved capacity to pay debt. And this would obviously have implications in terms of, the cost of our borrowing as well. The other thing is that the outlook is stable. The outlook being stable suggests that the ongoing reforms that the Tinubu administration has implemented is yielding some fruit, and it gives you some perspective around the global perception of our economy. That there's that perception of stability, and that trickles to everything in terms of pricing of not just the debt, the government debt, but even the exchange rate as well, that there is an indication of more stability. So those are very good. I think massive for us, because we have significant external debt, is the fact that when your ratings improve, it also has an implication in terms of your cost of borrowing. The risk is priced into the debt, and then when there's an improvement, the cost of borrowing would obviously be impacted. So it means that our borrowing cost and the cost of servicing debt might actually reduce as well. I think, why are we having this? I sort of hinted it or inferred some of that. I think the reforms that is biting deep, but it's been implemented. We've been on that path for the past couple of years. and it's now yielding some fruit. So the removal of the fuel subsidy has an important impact because the government then can reallocate resources from payment of subsidy and focus on other projects, whether they be capital expenditure or even more allocation to the states for them to meet up with their obligations. So that had an impact, as well as the harmonization of the interest rate, or the somewhat market-driven rates that we're having now, where there's minimal difference between the parallel market and the official market, and all that certainty brings in terms of investors bringing in their monies and having that ability to take it out at the real price is quite useful. So I think those are the reasons. But in terms of the outlook, I think very positive from my perspective. And this sort of ties into some of the feeling we already had towards the end of last year that we would see a bit of consolidation this year and more stability in the market. So it's not unexpected that Fitch will come out with this rating. And hopefully we continue to build on it, but there are still some ways to go in terms of things that the government needs to do to sustain the impact.
I agree with you that a lot of work still needs to be done. Like they say, the reward of hard work is more work. But let's look at CBN's balance of payments, net foreign reserves. This also looking pretty good with what we used to have before. Been in this business beat for some time, and I know what we've been recording and reporting before now. Yes. So, when I see these figures, I see that what really has been done right? What has changed?
So first of all, the reforms that was done, had to be done. And I would obviously like to, highlight the courage of the central bank in taking a course that was quite unpopular in terms of, the perception of the general public. How do you consciously say, well, the rates are so wide apart, the official rate, but nobody's getting dollars at that price. And then you make the bold move of saying, let everything be market driven. So they took that bold move. And then obviously dealing with the backlog, because you then had some repatriations and applications that were put in place. A robust forensic audit was done to establish, what was what, and whether there are valid amounts to be paid, and the commitment to clear them as well. And then all the constant reforms, and I think not just in terms of exchange rate, but even in terms of tightening the monetary policy, the monetary policy measures that were introduced ensured that it dealt with the issue of speculation to a large degree. There's that portion of speculation that I don't think has been completely addressed. But that obviously meant that speculators had to scratch their heads in terms of borrowing local currency and then going to purchase foreign currency. So that also dried up the liquidity for speculation. And then the interesting one around bringing more transparency to the market by implementing the the electronic exchange platform, which encourages clarity around the market, around who's buying and who's selling. I think with all those reforms, clearly, things have improved from an exchange foreign currency perspective. And while all of that has been happening, it therefore means that government doesn't have to spend so much in terms of importing, in terms of imports of crude, petroleum products. And then we've also had the Dangote refinery come on stream as well, which means that, some of the major marketers are now able to procure, especially when the government also, instituted or tried to broker that ability to buy the petroleum products in local currency in exchange for crude, which will be in foreign currency. So those things would have eased the burden of the government and ensure that there's improvement in terms of our foreign reserves. Now, what we then have is that unique ability for the government to use those reserves judiciously to price the local currency right. So, there's the aspect of the CBN's mandate, which is to intervene in with matters of pricing. And I think that, having a strong foreign reserves gives you that ability, because, there are many debates around the right pricing of the local currency. When people do the purchase price parity and all that, people still believe that the Naira is undervalued. And, having that foreign reserve gives the government the ability to find the right price. So I think, from that perspective, also quite positive in my view.
I totally agree with you. And I know on many occasions we've had that conversation where I've asked you that really, is our currency appropriately priced? Just like you mentioned, there's a lot surrounding that question. But let's move forward very quickly. Interesting conversation as always. But are we to say that the worst is over? That's with regards to reforms. What are your expectations going forward? My question will really be, what sort of interventions? I always like to ask that question, because when we have reforms, there should be interventions. And that is why Nigerians will keep saying, oh no, these reforms are hitting hard. What sort of targeted interventions do you think would play out positively at this time?
Thank you very much for that question. I think some of the interventions that government has taken are the things that one would expect. But I think, we suffer significantly from the fact that we do not have a structured social security system to be able to intervene, especially with the vulnerable. When you look at countries that really want to develop, that is a massive focus. So we've tried the direct transfers, we've tried the conditional cash transfers. I think the big problem with all these interventions has always been the data and the transparency around those interventions. Are the monies getting to the people that are intended? Is there sufficient transparency such that there is no, there's no graft within those programs? So I think those are the major challenges. Even though those programs exist, there's also the food security programs to ensure that food gets to the vulnerable at subsidized prices. With all of these things, I think data is important and having the right structure. As you can imagine, and I always say this, the unique identifier becomes a massive issue from our perspective, or at least from my perspective. Unique identifier, not just to identify the individuals, but also to identify, where they are located. And I think data is one of the big issues that I think the government needs to invest in. There's also all sorts of debates around, the population of the country at this time. Are we more than 200 million? Are we less than 200 million? All of these controversies are dealt with proper biometric identification, and not just not just enumeration of individuals, but also enumeration of properties and assets as well. And countries that really want to develop have such programs and have such interventions. So of course, we struggle with the federal system of the country, where certain data sits with local government. So for example, you have a birth, and then the local government records that. And then, as an adult, the person needs to get the national identification number, and all this disaggregated information, doesn't really help. So we really need that central data repository that actually captures who are Nigerians. I always tell people it's very possible for someone to come in from another country, neighboring country today, and go and swear an affidavit at a local government in a remote location, and the person can have a Nigerian passport in no time. So those sort of things needs to be dealt with. But apart from that, there's also the targeted reliefs, and some of it has already been implemented, but we obviously want more, or need more, like, the tax exemptions for low-income individuals, as well as the tax exemptions on basic food items. Some of these things have actually been, captured by the Presidential Committee on Fiscal Reforms and Tax Policy. Some of those tax bills that are being debated, with the public hearing, and also getting through the public hearing to the stage where there has to be a consolidation of the two houses. Some of these things have actually been incorporated in there, including exemption from medium or small-sized businesses as well. I think that those have to come through. And over and above all, I think, and this has always been a debate or something of interest that people have raised around the efficiency of government. It's a topical issue at this time, especially when you look at, one of the most successful superpowers of today, the United States, and the fact that they are not resting on their oars, although, some would say, there are different sides of the divide. Some would say controversially, or some would say not so controversial. But looking at, government efficiency as a whole, is government really efficient? Is government really accountable? Is 1 naira of spending going as far as it can when you look at government spending? Are there areas of harmonization? Are there areas of focus? Are there areas that we don't even need to play in at all? And then we just need to ensure that we restructure those areas. I think for me, that should be an important issue. Why? Because while the citizens have pitched in, the citizens of the country have pitched in to say, well, we support these reforms, we support the government, and we are taking the hit and sacrificing. They also need to see some sacrifice from the government perspective as well. So that is something that we shouldn't shy away from, but bring back to the fore in terms of a conversation. And of course, the issue of corruption, reforms that would help us in terms of transparency, in order to ensure that governments, spend and taxpayer monies, are optimized, would obviously be part of the interventions, which I think would bring more dividends to the general citizenry. Obviously, debt management is also something that needs to be looked at. It's not ideal when most of your revenues are eaten up by public debt and debt servicing. So we need to look at refinancing existing debts and also reduce borrowing costs. And again, the US, one of the main, the big superpower in the world today, is looking at that. Why not? Why not Nigeria? We really need to look at the debt. The Fitch rating helps us. The cost of borrowing will go down, but then we need to look inward and say, where are those fat areas where we need to cut and manage our public financing? So these things we have, not just me, but a lot of people on your program, I'm sure, have highlighted some of these things. And I think it's the time where we need to really implement, because some of these gains that we have been able to crystallize will only be sustained if we're able to see some of these reforms come through as well.
Our time is up. But in 1-2 minutes, if you can, inflation ticked up in March. What are your thoughts around the fundamentals? That's the last question.
Yeah, I think it shouldn't be something for people to worry about.
Yeah.
I think, things are trending at the expectations. Some people were even more pessimistic about, the rate of inflation. But, the cost of things have not significantly gone up. We haven't had significant devaluation and all that. So things are actually quite good. And I think in the area of food and non-alcoholic beverages is where we're seeing the strain, as well as transport. But those are minor increases. I think the big external shock that we all need to be watching right now is the decline in the crude price, which has gone down. It's gone up a bit, but not at the levels that we have budgeted as a country, and not at the levels that will give us the requisite gains. So if things and these shocks are things outside our control, but if things continue in terms of the tariffs that have been introduced by the US government, as well as the increase in production as we've seen from the US, and all that. And I think even if you look at the possibility of peace in the Middle East, as well as Russia and Ukraine, then those are things that should really worry us. And I'm happy at the fact that there are also reforms happening at the NNPC as well, because the NNPC is a major stakeholder in that whole department around improving our production levels. And I think that if we get things right, even if we have those shocks, as long as we're able to improve production levels, then we will be able to manage those shocks and maintain the economy at the levels that we've seen. I think the big fear from an inflation perspective would be an additional loss of value of the naira, which would then impact prices and so on. Now, if we're able to manage that, I think we're in a good space.
Mr. Kenneth Erikume, Partner Tax Reporting and Strategy, PricewaterhouseCoopers. Thank you so much. Enjoy the rest of your holiday.
Thank you, Tolu. Enjoy yours as well.
I'm here, as always. Well, that's true. Well, still to come on the show, another very interesting conversation, yes, after this break. He already touched on it, the economic effect of President Donald Trump's tariff. What does it mean for Africa and the global economy? I have the right person in the house. He's live in the studio. After this break, the conversation starts. Mr. Bola Olojede will have that conversation after this. Don't go. It's Business Nigeria.